Happy Veterans Day Monday, everybody. I hope you had a great weekend. You needed a bit of rest. If you paid attention last week, a lot was going on. So, first, let's say a big thank you to all of those veterans of the U.S. Armed Forces and those that are currently serving here and abroad for our great country. Fun fact, in case you wondered the origin of this day, the armistice for World War I took effect at the 11th hour on the 11th day of the 11th month. You have to wonder, at least I do, who thought after arguably one of the bloodiest wars in history, who thought, let's make this 11-11 at 11? I don't know, just confusing to me. Regardless, this allows us to stop for just a moment and thank those who sacrificed for the freedoms that we have. Thank you to all that serve. Today, as I said, November 11th, 2024, and this is your post-election, post-Fed Monday market update. I have to say, let me give you a bit about Monday and Tuesday, but this report could really just start on Wednesday or actually Tuesday night. We'll recap this week and then we'll preview the week, this coming week, and not as quiet as you may think. On Monday, U.S. stocks dipped slightly as major events, the presidential election and the upcoming FOMC decision on Thursday, heightened investor caution. Key topics included China's recent economic stimulus to support its property sector, the U.S. factory orders report that had a minimal market impact, and weak demand in the 3 and 6 month Treasury auctions. Oil prices climbed amid OPEC Plus news on delaying output increases, geopolitical tensions, and a tropical storm threat. At the end of the day, the Dow was down a bit over 0.5%, S&P down about 0.25%, the NASDAQ was down about 1/3%. On Tuesday, U.S. stock markets rallied as voters headed to the polls for the presidential election. This positive movement was driven by strong economic data, including a report indicating accelerated growth in the U.S. services industries, which came in ahead of expectations, strong earnings, particularly from tech companies like Palantir Technologies, which saw a 23.5% surge in its stock price due to strong sales and raised revenue guidance. That contributed to the market's upward moves. Investors appeared optimistic despite the uncertainty surrounding the election outcome. The news wires and the airwaves were full of talk, but no one knew anything, and it was basically reporting every side and no side. Instead, the markets focused on solid economic fundamentals and corporate performance. The Dow was up 1%, S&P up 1.25%, and the NASDAQ was up almost 1.5%. Here's a quick market update following the election results and Wednesday's trading session. Markets rallied strongly on Wednesday following what seemed to be an election that had a winner, something that most of us didn't think we'd see immediately. Markets jumped in response to the election results, with optimism surrounding a pro-business Republican sweep. Financials surged over 6%, and energy was up 3.75% as investors shifted from defensives to growth-sensitive sectors. Treasury yields saw a pullback on a strong 30-year bond auction, and that helped stocks also. Dow closed up 3.5%, S&P up 2.5%, and the NASDAQ was up almost 3%. Small caps, the Russell 2000 was up almost 6% on the day. Although clearly the money was already on the move, all eyes now turn to the Fed, whose two-day meeting closed out on Thursday with the release of the end press conference. It felt very much like all of that money that was on the sidelines, or maybe even on the wrong side of the trade, moved to the other side on Wednesday. Like everyone was going from one side of the boat to the other, all at one time. On Thursday, markets continued the post-election rally as global eco data supported the bullish sentiment. Tech stocks led the way again, fueled by positive earnings from Qualcomm and Lyft. Sector performance was mixed but healthy, with tech, communication, and consumer discretionary sectors up around 1.25% each. Defensive sectors saw modest gains as well, while financials and industrials did take a breather, reflecting some digestion of Wednesday's strong rally. Fed cut rates by another 25 basis points as expected, keeping the door open for a December cut. This stability from the Fed keeps the tailwind on stocks intact as markets look for a strong finish to 2024. The Dow finished flat, S&P up 0.75%, and the NASDAQ up 1.5%. On Friday, U.S. stock market celebrated another record-setting day to cap off a remarkable election week rally. I'll get to the numbers in just a moment. In line with political events, I have said that in the short term, we may see some action. Tesla saw strong performance, rising 8.25% on Friday, pushing its market cap back up above the $1 trillion threshold as investors expected favorable policies for the electric vehicle sector from the president-elect. Axon Enterprises, which produces law enforcement technology, surged over 28% after also raising its revenue guidance. Trump Media shares spiked as 15% as President-elect Trump reiterated that he's going to retain his stake in the company. The rally was also supported by the Federal Reserve's recent rate cut, 25 basis points, which Fed Chair Jerome Powell, of course, backed with optimistic remarks about the U.S. economy's health. This confidence added to the sense of market momentum, though some analysts cautioned that valuations were approaching stretch levels, potentially inviting some choppiness in the weeks ahead. Internationally, China's announcements of a $1.4 trillion fiscal stimulus aimed at managing local government debt and also supporting sentiment, providing a lift to global markets as investors saw it as a significant policy shift shift to address underlying economic challenges. The Dow rose 0.5%, 44,000 milestone intraday for the first time. The S&P 500 gained 1/3%, finishing just shy of 6,000 after briefly touching that 6,000 level. NASDAQ composite inched up about 0.1%. All three indices finished the week at record levels. Returns for the week were the Dow and the S&P were each up about 4.5%, and the Nasdaq was up 5.75%. Small caps, as I mentioned before, surged even more. The Russell 2000 index up 8.5%, its best week since April of 2020, moved up by expectations for a pro-business stance under the Trump administration, particularly around deregulation and growth policies expected to benefit smaller companies. As markets closed out the week, there was a lot of talk about markets being overbought, stretched in valuation, and the worry about some black swan event. By the way, these were the same fears before the market made the last move also. I will remind you that I mentioned three risks that I saw. One is gone, the political risk, at least of the elections. The others, valuations and geopolitics, they're still around. We'll have to see what comes next. Looking ahead to this week, here are the key events that will shape the market. As you know, the week kicks off with Veterans Day. Today, bond markets are closed, but stock markets stay open. Inflation is back in focus on Wednesday with the release of the October CPI. After September's surprising 2.4% reading, markets are hoping for signs that inflation is stabilizing around the Fed's 2% target. PPI follows on Thursday, and that'll give further context on wholesale inflation pressures. We'll also get some big earnings too, Home Depot and Cisco midweek, which should provide some insight into the state of the consumer and tech spending. Walt Disney's earnings on Thursday will shed some light on consumer spending also, this time in entertainment and streaming, a barometer for discretionary spending. Finally, we'll get retail sales data on Friday. This one's going to be very important. That should show how consumers are holding up against high prices and higher interest rates. Strong September sales have fueled optimism for a resilient U.S. consumer, but this data could be very important for the year-end market sentiment. After last week's Fed rate cut, we'll get more insight into the Fed's outlook through speeches from a slew of Fed heads. We'll get Powell himself. We'll also get Waller, Barkin, Logan, Musalam, Kashkari, Harker, Schmid, Kugler, and Williams. As we move past the big news items into more news, we cannot move on without some history. November to January historically has been the best 3-month period for the Dow and the S&P. And all years since 1950, the Dow was up an average of 4.25% and was positive 72% of the time. S&P up an average of 4.25%, and positive nearly 3/4 of the time. And let's wrap up with another, this time not so fun fact. 62% of Americans want to stop changing the clocks and make daylight savings time permanent. Studies have shown that since it gets dark so early now, less credit card and debit card spending and a spike in depression. So let's find good things to talk about and review your goals, as I mentioned on Friday's video about a risk audit. It's time to check that out. If you missed it, go back to that video. But the time to review is when markets are at highs. It's best to get a good read on your risk up here, not when markets fall. Okay, come back Friday for another great planning video, and have a great week.